I suspect that the first surge that we're getting that has begun, I'm not waiting on any more numbers. In the next 3 to 5 months will get you well above 50, likely into the $60, $70 range. Now, that's not the end of it, but that's the next surge. And I think it will be quite dramatic. I mean, obviously, if you go there, that's a big percent gain in silver over such a small period of time. But I think between now and later in the year, we're going to see somewhere 60 to $70 silver. And again, that's not the end of the move. That's just this surging leg. And I see silver outperforming gold during that time. And I also see the gold and silver miners outperforming gold during that time.
Got it. Okay, so really what you're talking about, correct me if I'm wrong, I don't want to put words in your mouth. You're talking about the gold and silver ratio. You see that ratio compressing significantly then over the next few months, correct?
Yeah. Again, I measure it a different way. I simply divide an ounce of silver to gold, 1 ounce. And right now you're 1.1%. If you go back over the last 50 plus years and look at each year, what was the best reading that silver had each year at some point in that relationship to gold? 2% is almost normal. It occurred like 21 of the last 50 years. Silver's at least been 2%. And those weren't necessarily even dynamic bull trend years. In the more dynamic bull trend years, like 1979 and 80, or 2010 and 11, silver got up to 3.5% and more, the price of silver. Well, just forget the price of silver right now and gold. Just look at that spread and say, well, gee, I'm going to buy something at $1.10 and it's going to go to $2. Okay? That's nearly a double just in the relative performance.
Right.
I say go to 2. That's not even some outlandish norm. That's the norm. 2% is like a median for 50 years. And given that we're in a bull trend, we could go further than that. But right now, I'm focused personally on this particular leg, in part due to the fact I'm also heavily into calls. And calls have, time sensitive. But I do think in the next 3 to 5 months, you'll get that kind of dramatic, I'm out of here move. Not that that's the end of the move, but that is the surge that I'm looking right now. And I think that it's about to unfold. And there's some other events in other markets that are also at what I would call major snap points.
Okay, let's talk about the miners first, and then let's talk about the other events or the other markets here that you see unfolding that could help propel this forward. So talk to me about GDX, GDXJ, ETFs that you, different money ETFs that you trade and follow.
Yeah, we plot the spreads on these guys about every weekend report. What we do is we divide the price of GDX, for example, or GDXJ into the price of GDX. So we get a spread relation between the junior miners and the big miners, okay? And since 2020 surged, remember, everything went up big then. Silver went up big, gold miners, gold, et cetera. The relative performance of the junior miners dropped back down and built if you look at the spread chart now, forget the price of the ETFs themselves. It built a base, whereas the performance dropped and then it went sideways. The top end of that base was so definable, an idiot with a crayon could draw it on the spread chart. We broke through that. The junior miners have now broken through, meaning the junior miners are now about to outperform the bigger guys. Now, that could have, some meanings to it, and I don't want to try to interpret it too much, but when money flows into the mining sector and then focuses more on the juniors, it suggests to me that there's some nervous people in the stock market who are not normally gold investors, but they've started to hear about gold going up finally. They got the message. And the miners have done quite well lately, even on price basis to, sort of garner their interest.
Yeah,
They want to buy cheap. They want to, a lot of investors like to buy more stock at a cheaper price. So that means the juniors. So that could be one of the influential factors in that shift in the spread. In other words, public interest in the sector. The other spread that's going to gain, I argue, is silver versus gold. Now, when I go back, now let me give you context on the gold miners versus gold. When you go back, we've run charts on this to the 1980s, and you plot the XAU index, which is gold and silver miners, Philadelphia index. It has a long history. You go back in the 1980s through the present. Between the 1980s, 90s, and into 2000, early 2000s, it was in a spread relationship between 17.5% of the price of gold, dividing XAU into gold to get the express as a percent, and 35%. So again, there's this range. Let's call it 17.5, 35. You lived in it. When we went into the bear market, 2013, 14, and 15, that spread collapsed all the way down to 4%. Imagine a stock that's been living 17.5 to $35, then goes to $4. Okay, it's a wipeout. Okay.
Yeah.
But since that late 2015 low, where the miners were lowest they've ever been relative to the mother metal, the spread has upticked a bit and gone into a range. Right now, that spread's at about 6%. Divide XAU into the price of gold. Still very low, but it's firming, meaning it's actually higher right now than it was in late 2015. That means the miners have actually, if you do the math, have gained more than gold since the bear low. Hard to believe because of the tone, the way the price has advanced has been sort of sloppy. But actually, on a net basis, if you bought gold miners then as opposed to gold, you did better than buying gold. Okay, when I look at that spread chart, and we examine it technically, you come up out of this base, and I think that's what you're about to do. You're going to go up to next resistance. Where's next resistance? 17.5%. Multi-decade lows, okay? That's just getting back to the bottom end of what had been the reality for 30 years, okay? Or 20 years. That's a tripling, in the price of miners relative to gold.
Yeah.
Current levels. So I argue not only is silver going to outperform gold going forward, but the miners are going to vastly outperform gold. And again, that's probably due to a sense of growing uncertainty about the stock market, despite the recent teaser rally, which, by the way, is not reflected in the leadership anymore. And people get nervous and they look around and say, well, what's working? And a buddy down the street, he bought gold miners 6 months ago and he's smiling. And they said, well, I didn't believe you, but maybe I need to do that. And so they start to move some of their money. They're not going to buy silver futures, okay? And not necessarily options, but they'll go in and buy those miners because that's a stock and some of them have dividends and so forth. So I think that's a reflection, this shifts toward the miners, not only in the cheapness of the miners relative to gold or relative to the S&P even, but in the shift in sentiment that's beginning, looking for a better place to be, lower risk, greater reward potential. I think that's what's transitioning right now.